Hey guys, welcome back to my channel. In today's video, I'm diving into something super exciting, and this is also my very first stock analysis video. And what better company to start with than Tata Motors, which is one of India's most iconic brands. And I'll break everything down in a simple, no-nonsense way and what's really happening with Tata Motors, the numbers that matter, and whether it's worth your attention as an investor or not. So stick around till the end because I'll also share my take on whether this could be the right time to invest in Tata Motors or not. Let's jump right in. And a quick disclaimer before we get started. This video is for educational purposes only, and always do your own research or consult a financial advisor before making any investment decisions. Now let's start by looking at the recent Tata Motors Q2 FY24 performance. The company reported a revenue of 1,01,450 crores, which is a 6.1% drop from 1,08,048 crores in the previous quarter. So what caused this drop? First, chip shortages. The global semiconductor crisis is still a major challenge, especially for Tata Motors Jaguar Land Rover division. With fewer chips available, production targets weren't met, which directly impacted the sales. Second, a global economic slowdown. Key markets like Europe, where JLR has a strong presence, are seeing weaker demand due to inflation and uncertainty. And on an year-over-year basis, revenue dropped 3.5%. Last year, Tata Motors benefited from a post-COVID rebound with pent-up demand driving sales. But this year, the industry is stabilizing and those factors have faded. Now let's talk about their profitability. Net profit for the quarter came in at 3,450 crores, down from 5,692 crores in Q1. Margins also fell from 15% to 12%. And here's why. Number one, higher input costs. Raw materials like aluminium and steel remain expensive, which has eaten into their profits. Number two, weaker revenue. Lower sales, especially in high margin JLR models, meant Tata Motors couldn't cover its fixed costs as effectively as they'd like. And number three, currency fluctuations. The weaker euro also hurt margins in Europe, one of JLR's key markets. And despite these challenges, the company managed to maintain double-digit margins, which is a positive sign of resilience. Now let's talk about Tata Motors debt. The company has made excellent progress here. Borrowings dropped to 1,06,549 crores in September 2024, which is a massive 20% drop from March. And this was achieved mainly due to the improved cash flows from Jaguar Land Rover and a focused effort to reduce debt. And coming to the working capital, the customer payment cycle reduced to 14 days, meaning customers are paying faster. And coming to the inventory days, it got slightly down to 64 days, showing better inventory management. However, their negative cash conversion cycle, which is at minus 48 days, is definitely operationally efficient but might strain supplier relationships if payments are delayed for too long. Now let's break down Tata Motors' two key business segments. Number one, Jaguar Land Rover. Jaguar Land Rover contributes about 69.1% of Tata Motors' total revenue, and it's the most significant part of the Tata Motors revenue. The division is recovering in markets like Europe and China, and demand for luxury SUVs like the Range Rover is strong. However, challenges like chip shortages and rising raw material costs continue to squeeze their margins. And number two, coming to the domestic operations, Tata Motors domestic business is also a key driver of growth. Number one under the domestic market is the commercial vehicles. This segment has been a backbone for Tata Motors, serving industries like transportation and infrastructure. And right now, the demand is soft in rural areas and infrastructure dependent sectors. But Tata's strong brand and focus on CNG powered vehicles position it well for recovery. Number two, passenger vehicles. Here's where things get exciting. Tata Motors is now one of the top three players in India's competitive passenger vehicle market due to its well known models like the Nexon, Harrier, and Punch. The company's focus on safety and design is clearly paying off. And number three, electric vehicles. Tata Motors leads India's EV market with popular models like the Nexon EV. While the segment holds immense promise, it requires significant investment and competition from global players like Tesla is heating up. Maintaining leadership will depend on scaling efficiently and staying innovative in the EV sector. Now, talking about the ownership trends, promoter holding has dropped to 42.58% from 46.37%, which is likely because of funding other Tata Group ventures like green energy and EVs. And on the flip side, foreign institutional investors, which are also called as FIIs, have increased their stake to 20.54%, signaling growing global confidence in Tata Motors' future. Now let's quickly talk about their growth potential. Now Tata Motors has very strong growth potential due to the below factors. Number one, profit CAGR. Over the last 5 years, the company has delivered an impressive 93% CAGR, showcasing its ability to scale earnings. And number two, EV leadership. Tata Motors dominates India's EV market, benefiting from government support and first mover advantages. Number 3, JLR recovery. New launches and a focus on hybrids and EVs are helping Jaguar Land Rover regain momentum globally. However, challenges like rising costs, high capital expenditures, and growing competition still remain. Now let's quickly look at the technical side of things. The current price at the time of recording this video is around 790 rupees, and the support level is around 696, and the resistance is at 1179, and the 200-day moving average is at 902, which is acting as a resistance, so do keep an eye on that for potential movement. And now finally, is Tata Motors worth it? Here's my take. In the short term, Tata Motors is likely to face volatility due to chip shortages and global economic challenges. But in the long term, the company's leadership in EVs and the Jaguar Land Rover's recovery and its debt reduction efforts make it a compelling investment. And am I going to invest in this now? The answer is yes, but I'll be investing around 50 to 60% of what I planned originally, and will do the later based on stock movement. And remember, this video is only for educational purposes, and always do your own research or consult a financial advisor before investing. And that's it for today's deep dive, guys. If you enjoyed this video, hit like, subscribe, and share your thoughts in the comments below. And do you think Tata Motors is a long-term winner as well? Let's discuss below. See you in the next one.